investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and the board and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Friday afternoon, 53 minutes left to go until the closing bell. And boy, we got quite a market on Friday and metals on Friday. Whew. Hard to overstate the type of volatility we're getting. Gold contract down 8%. You were down at 4,700. We're $224 off of the lows right now. Okay, and boy, you are going to have some volume, folks. We're going to kick it off with metals today. Okay, yesterday, 557,000 contracts, and I imagine we're going to get above that number by the end of the day. We're at 471 right now, and on a weekly basis, 2.2 million contracts, and right now we're negative. Last week you closed at 49.83. We're at 49.10, so you're negative by about $70 on the week for the gold contract. Silver, more pronounced than that. Check out the weekly on silver. Okay, silver engulfs the last day, too. As I said at the 3 o'clock update, silver just traded higher from March of last year. It's going to be February. Okay, this weekend. Sunday is February 1st, folks. We've traded higher from 29.15, the week of March 31st, to 121.78, and in the span of 24 hours, you take back half that move. Remarkable. Okay, and you know, if you're out here, folks, and you're in this market, this is a heck of a pullback. Natural to think we're going to get a bounce. You're already $10 off the lows. Protect yourself in this market. Okay, if you have over-leveraged positions that have run from periods, protect yourself. Because right now, silver's back to where we were trading at, folks, almost 12 days ago. Okay, silver right now is about $84. And 2 weeks ago, you were trading as low as almost 86. Okay, so yeah, we just ripped lower from 121. Okay, but there's a very real threat that this market's broken right now, and you could see 47 as easily as you saw 84, and you could be at 121 by tomorrow. I get it, but protect yourself in this market. Okay, the bubble just popped. You trade from 121 down to 74. I'll show you. I mean, some of the doubles. Okay, some of the doubles in terms of just massive performances. This is dust, okay, the 2 times bear direction inverse of the miners. You have nugget and dust. This is dust on the bear side. You're up by 24% in 1 day, folks. Okay, the juniors on the bear side. JDST up 25%. ZSL is up 44%, which is inverse, double inverse silver. Okay, this one's a ProShares one. From 280 back to 230, and you're still up by almost 50%. Okay, just remarkable moves, and protect yourself. Okay, because you don't know how fast, you're talking about just a double inverse of a metal, and that thing was up 70% at one point, I think, ZSL. It's a double inverse, and you're up 70%. In 24 hours. Whew. So this market's going to be a little haywire until things calm down. And yes, okay, there's no such thing as coincidences, as in you get a new Fed chair, we get dollar strength, okay, and you get a pullback in gold. But we were bubblicious in silver, folks, okay? And if you got a little over-leveraged up here, that's okay. That market's gone. We might not see 121 again for a while. Doesn't mean that silver's going to get hammered and go to zero. But on a monthly basis, folks, look at this chart. 1, 2. Does anyone else stick out on this? Okay, now, hey, so protect yourself. Don't get over-leveraged. Don't think that you've ridden out the worst of it. Okay, we've gone higher for 11 months, and this pullback has taken 24 hours. So don't underestimate how quickly this market can move. And I'm not screaming bear, okay, and I'm not telling you to sell all of it, but there's a habit of this recency bias and overconfidence, right? And we've all been there before. How would you ever sell out of silver at 84 if you rode it all the way up to 121? Well, just make sure you pick a stop somewhere, folks, okay? Just pick a stop somewhere. Because a stop somewhere. Because yes, I would say with the type of geopolitics we have going on, okay, gold's heavily favored. But this has not been a story of dollar destruction, right? And gold, and yes, the dollar got destroyed at the beginning of the year. The dollar's at 97. We were at 97 and change April 21st of last year. April 21st of last year, gold was at 3,400. Okay, so gold has just gone up to 5,000 from 3,400 in April 21st, and you check out silver, and April 21st, come on, you got to chuckle. Silver's at 33 and you're at 84. Okay, silver could pull back to 66, and you'll still double in price at the same time the dollar stays somewhat in a similar price range. So there will be plenty of opportunities in this market, folks, okay? And, you know, it's been tough to be a little patient in this gold market. We had some nice trades on this pullback in November, okay? And we got stopped out right around on this, I think it was this one. We got stopped out. It had to be this pullback right here, okay? Nice profits in some gold equities going from the lows there up to the highs over a period of about 2 months. Well, guess what, folks? We were at 45.81 was the high. You just hit 4,700. We were within 100 of there. Okay? So that entire rally wiped out in 24 hours. The market's not behaving rationally, and it's been a heck of a run. And I say it's been on a run, you know, when I just did that, saying that 50% retracement, okay, on silver, that's going from 26 bucks on the lows. Well, we were at 22 bucks. Okay, we were at 17. That's just the last 8 months. Gold's the run it's been on. You actually went outside of the channel it's been in. And if you really want to see, okay, the type of pullback that's now possible, 4,200 is just a 382, which takes you back to right around the October highs. It's just a 382 of the pullback that we've been in for 2+ years. So we go a little big picture on metals, but sometimes, folks, look at the selling. Okay, we just traded from 5,600 to 4,900. You're going to do more than 2 million contracts on the week, and you've traded lower. XAU down 12% right now. HUI down 12%. Just protect yourself, folks. It's been a heck of a run. HUI is still up from under 300 to 787 in about a month. All right. Come on back, folks. We're going to talk some equities. We'll talk some more miners as well. We got the S&Ps off by 44, and we got gold trading at 49.22. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And yeah, how about these ETFs, Mike, especially when you're talking about ultra ETFs? Oh, come on. AGQ. There we go. So this one is down 55%, folks. Okay, and this is the Ultra Silver. I believe that's a double, right? Yeah, it's going to be a double because silver's down 30%. This thing's negative 60%. And the flip side of that is the ZSL, which is just the Ultra Short, right? Up 50%. Down 60%. Oof. Let's check out the volume in some of these things, man. Yeah, look at this volume. My goodness. Whew. You know, folks, if you're trading these ETFs, okay, Direction, they're an outstanding sponsor. They always talk about, okay, listen, they're leveraged inverse daily investment vehicles. Okay, now that doesn't mean that you can't hold them for multiple days, but the investment goals are set to match when you talk about the 200%, the 100% on a daily basis. So what happens is that when you get different moves, you get a choppy market, you get a momentous market, and then you get a rip-roaring pullback, it can really impact the long-term results versus the underlying that it's trying to benchmark. Okay, now if you hit the direction banner on the front page of TFNN, you'll see Education and Insights. Right there, start here, okay? And these are two great pamphlets I always talk about, folks, and they really are. Anybody that's trading them, okay? I believe it's these two right here, okay? So that was just the one page right under Education and Insights. They got a bunch of great videos. They got a video over here. But these two in particular, Understanding Leveraged and Inverse Exchange Traded Funds, and then Volatility Matters. And they have a number of different articles under here, okay? These are just the two that I encourage you to start with. Okay, and you go over to these. So when they talk about Volatility Matters, this shows you in a hypothetical example. Okay, this one's talking about the Direction Daily Technology Bull, TECL, and the Bear, TECS, and they walk you through how, okay, a higher volatility period, right? Although the benchmark gained 6.6% over the period, the Bull ETF gained only 9.94%. It's supposed to be a 3 times ETF. So imagine this. This is a period from December of 2008 to April of 2009. It's basically a 4-month example of time, right? imagine holding this and thinking you're going to get 3 times the return over that period of time. The benchmark goes up 6.6% and you're up less than 10%, okay? But volatility matters. And the same thing on the other side of that. It can go the other way, right? If you get a trending market, the index, and this is on a hypothetical example, if you go from, now this one was from December 2008 to April 2009, then they go April 2009 to December 2009. The same benchmark experienced much less volatility. The benchmark was up 35% over that period of time, but the bull ETF was up 157%. Yeah, more than 51%, more than 3 times the benchmark. The bear ETF lost 69%, which is 35% better. Okay, so when you get trending markets versus volatile markets versus choppy markets, it matters. And then you go over to the second link, understanding leveraged and inverse ETFs. And what this shows you is a little bit of the math that goes into, right? Whether you're in a 2 times, a 3 times, how your exposure ratchets up with additional exposure on the way up. And in turn, okay, therefore, it'll go down on the way down. And that's where you get the difference when volatility matters of those indices. So if you're trading these, folks, okay, they're daily investment vehicles, number one. And when you look at the longer term, just be aware of now it can be on your benefit as well, but you have to, as in it can obviously return more as one of those examples, but you have to understand the reason why on a longer term basis, right? The performance of the leveraged and inverse ETFs may not always match the 2 times or 3 times of the underlying. So if you nail a momentum market and all it does is go up, you're basically continuing to leverage, and so your returns on a longer-term basis are going to be greater than 3 times the underlying. If you get a bunch of chop, that's going to eat you up sometimes on a leverage, the way that they're leveraging up, and then your pullback wipes out your gains. But boy, on a day like today, yeah, Dust up 24%, whoof, and JDST up 25.6%. And just be careful, folks, as I said. Pretty remarkable when you look at it, right? A 50% retracement of a run that's been a generational run from $27 to 121 in the span of about 10 months. And just like that, you get back 50% of it in 24 hours. Okay, let's jump around to some equities. Apple, with their earnings last night, up by 0.4%. See the volatility last night. You open lower to 254. We take a look at some of the volume on Apple. Yeah, not too impressive on a daily. Okay, nice little pop on a weekly. This is the most volume we've done since the week before Christmas, when you had a pullback. There's some nice strength in Apple. Checking on Microsoft and Meta. Yeah, tough one for Microsoft. And how about that, right? We just talked about silver. Silver gave back 50% of the run since April in a day. Well, here's Microsoft. Now 61.8%. You're back to that line from the run up to 555. And boy, how's that for some volume for Microsoft? Whew. Let's back this up. Geez, 400 seems like it's the next stop. Look at this. I mean, what else is sitting out there? You're in the middle of all this chop, and you got the highs from the week of the tariff lows at 393. There's your volume. All right. Meta couldn't get above their earnings from 90 days ago. You had a high out here, 759 from October. We hit 744, not even close to the same amount of volume, and reject that area. So that's going to be your area. And that also correlates to the highs of February last year, which was 740. That's exactly where we hit, 744 today. Well, that's some good volume on Meta, that advertising engine. Now, next week, we got Amazon and Google. Amazon, down by 0.6% today. You got Google shares down by 0.2%. Look at this run, man. Google makes an all-time high yesterday. Volumes have been drying up a bit since about 300. Check it out, right? November 17th, then you come into Thanksgiving, the week after that. Day before, 185 million we were doing that week. It's some nice strength from 90 days ago. This market has just crept higher. And look at this. So Google's going from 306 on Christmas week up to 342 this week. And really not much volume in here. No big volume spikes, no strength, pushing above the highs we had in November when you pushed above 300. We closed that week at 299.65. All right, gold off about 8% right now. You're $230 off the lows. Silver, $10 off the lows, down 26.7%. Platinum down by 17% right now. You jump over the VIX. Not bad with everything going on right now in the markets. Under 18. VIX at 17.97. Stay tuned, folks. We'll come back. Some Kevin Warsh. We'll talk about Mr. Warsh, the new Fed chair. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So mortgage companies PFSI. How about this thing? Down 34%. PennyMac Financial Services. So they're out with their numbers last night. Down 34%. $99. And yeah, many of the mortgage stocks tumbling today. Reported profits significantly below expectations, dampening the outlook for other lenders. Earnings $1.97 versus $3 a share was driven by borrowers paying off their loans faster than expected, though. Right? Not exactly indicative of extreme weakness when you have people paying off their mortgages earlier, but you're spilling over to all of them. Yeah. And there's your drop there from PennyMac in yellow. They're dragging other mortgage lenders lower because its mortgage origination spreads were tighter. The market is worried that other mortgage originators will also have tighter than expected spreads in the fourth quarter. Tighter spreads lead to less revenue. It's that simple, right? Every provider geared up to absorb accelerating refi activity, so when it came, they were ready and competed heavily on loan pricing. Oof. Yeah, Rocket down 16% right now. Jump over the home builders. Lennar off 1.8% right now. Quite the pullback yet again. You're coming right back in. We filled the gap. Okay, and now we're in there. We filled the gap. That's what I'll say. I keep looking at these home builders. Haven't pulled the trigger just yet, but we're close, folks. I think we are. It becomes an issue of everything at some price becomes attractive. And with a new Fed chair, okay, and home ownership in play, Fannie and Freddie are now doling out buying back mortgage-backed securities. So much for the privatization of Fannie and Freddie, folks. They're just taking all the cash they can and buying all the mortgage-backed securities they can. Sounds satirical. That's what's going on. I imagine there may have been discussions with the new Fed chair, okay, about the potential for them to cut rates and what's up with the 10-year, with mortgage rates, etc. They can buy mortgage-backed securities as well. And what's remarkable is, so Kevin Warsh, he was in the running when Powell got picked. And, you know, some of the stories that got written then I'm reading about talked about he was just such a young guy then. And maybe Trump didn't think he had the poise, the maturity, or just the look of the maturity, either way. And so Powell gets picked. And here we are in 2026 now. And we know how that went. He's been a critic of the Fed since leaving 15 years ago. Now, even when he was at the Fed, when they were buying mortgage-backed securities, okay? And I'll have to find the clip one more time, the quote one more time, because it's a realistic argument, and that's what we're in right now. Here we go, yeah. In 2010, when Warsh was still a Fed governor and some Republicans were unhappy that low interest rates were helping the Obama administration finance larger deficits, Warsh didn't just defend Fed independence in passing. He devoted an entire speech to the subject, an ode to independence. Any attempt to influence inappropriately to conduct the Fed policy would yield a strong and forceful rebuke by Fed officials and market participants alike. The only popularity central bankers should seek, if at all, is in the history books. I mean, that's a good speech that probably the Fed chair should make today, no matter who they are, right? We'll see if he makes that speech and lives up to that. But he was critical of what was going on back then. He was critical of the mortgage-backed securities that were being purchased during that crisis. And, you know, not at the beginning of the crisis, okay, but as things stretched out, he was warning of inflation fears. Well, that was 2010. So, you know, maybe he had an epiphany. Who knows, right? We're going to get to find out. And I say an epiphany as in maybe he had an epiphany. He said, you know what, that wasn't a big deal. Maybe we should be running hot. Maybe they should be buying even more securities, okay? Because here we are. And he's the man now. Jump over to some of the other builders. Lennar, we just looked at. D.R. Horton. You fill that gap? 146.22. We did. You fill that gap that we got from the January pop in D.R. Horton as well. And KB did it as well. just technically, folks, 100's a nice number on Lennar. Okay? That's where you have support going all the way back to March of 2021. 5 years. Here we are, coming into February of 2026. Doesn't mean you're going to be right, but at least you got a plan for the trade. Okay? And in this type of market, just put some stops in. You don't got to get married to these equities. Okay? Silver will show you the type of volatility. 50% of pullback of a 10-month run in one day. Because if you do start trading meaningfully below 100 on this chart, this area, the lows of 2022 is hanging out here. And that's like $60, 62. But this thing has strength in November, folks. We've pulled back on lighter volume. That's your monthly. You take a look at the weekly. Look at this weekly. The 2 weeks. Okay? That was a lot of strength around Thanksgiving. Look at this light volume pullback. These are weekly charts. Okay? Yeah, we pulled back with volume, but nothing compared to that acceleration. There's a lot of strength in there. Lennar the strongest, in my opinion. And DR Horton, similar. The acceleration from January 5th, you back down a bit. All right, we'll check back in on metals. All right, we got 23 minutes left to go until the closing bell. I was going to say, look at this. Oof. Gold's down $100 since I came on the air, folks. Doesn't even look like it, right? Yeah, it was trading at $49.71 going into 3 o'clock, and we're at $48.70. Doesn't even look like it because this chart we're looking at on a 5-minute chart, folks, has $472 of price spread in gold. But guess what? We got a little selling right now. You jump over to silver. And yeah, silver rolling over 82.19. Just be careful in this market, folks, because yeah, I don't think we're dropping another $10, $20 today, but boy, that was the first sell-off when we hit 121, and I haven't seen anything like this, man. Of course we haven't seen anything like this in a while. Silver was only trading, folks, at $50 once in 1980, briefly at $49.82 in 2011, okay? And just in the last 6 months or so did we get above $40 an ounce, and we are down $40 an ounce today. So historic day on silver, we're rolling over a bit. S&P's off by 41. Coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Silver down 28.3%. And yeah, for a commodity that's got plenty of action, when you're talking about 2 times ETFs, protect yourself out there, folks, because we haven't seen anything like this. Like I just mentioned, silver was trading at $40 a few months back. This thing just went down $40, okay? It could easily be at 60, it could be at 120, it could be at 160. That's why you couldn't short the heck out of this thing when it was at 121. You could short it, okay? But this is not a situation where this is a no-brainer. Hindsight always 20/20. Okay, you can't, very difficult to tell sometimes when things get parabolic and bubbly, when that bubble's going to burst. But look at this chart, man. You're talking about quite an engulfing, taking out the last 2 weeks. And imagine this. You're going to take out the last 2 weeks when you did 875,000 contracts and 563. So combined, you're doing about 1.4 and change. We're doing 1.2 this week alone. That's 2 weeks of monster volume on the way up, and you're going to engulf both those days, and you're going to almost have as much volume as both weeks combined. Now, you did have one short week in there with 4 days for MLK Day. But, oof. And yeah, so Mr. Warsh catching up. And hey, people change, okay? It's just interesting learning about this gentleman, the things he said, how he thinks about things then. Now he's going to be the man in charge. You see how Powell, you never quite know. It happens with Supreme Court justices sometimes, right? You get them in there, and then they make their mind known as the cases come, as the situation arises, Mr. Warsh. But yes, so he was a governor. Bush nominated him in 2006. Now, this gentleman, he married Jane Lauder, an executive at Estee Lauder and an heiress to one of America's wealthiest families. Probably more than an executive, right? His father-in-law, Ronald Lauder, okay, major Republican donor. Nonetheless, Bush nominated him in 2006. He was 35 at the time, the youngest person to join the Fed in the history of the central bank. Okay, 2006 he joins, and then welcome to the job, Mr. Warsh, in 2008. Of course, the financial crisis. Okay, he was a player. He played a part in AIG, the bailout. He helped choreograph J.P. Morgan acquiring Bear Stearns. He was an early supporter of the Fed's aggressive response to the crisis. He soon became concerned that the central bank stimulus could prompt inflation down the road. By 2010, when the Fed had began to buy up U.S. government bonds in an effort to boost the economy, he became a skeptic. He warned in a speech that any judgment to expand the balance sheet further should be subject to strict scrutiny. Now, he relented and voted in support, and that is the case back then, right? Powell almost laid it out almost sometimes. Most of the times, if you were really adamant, you would come out and you would vote against once, and then you vote with the majority, okay? And for whatever reason, maybe they'll shake that up. But yeah, then he went on to the Hoover Institution at Stanford. He became a board member at UPS. And then he was close in 2017. And then Powell won him, and he was 47 years old. And maybe just for whatever reason, didn't happen, but he's the man now. Pretty interesting, the things that get said no matter what, right? It's a difficult conversation, the rates, folks, okay? But to have him saying that at the time that he was not just like a student, he just wasn't. He was a Fed governor saying that, hey, you cannot be stimulating this economy to this degree. Inflation is a problem. It's going to come up. Well, guess what? It didn't come up, though, right? It didn't come up. That's the thing. That was 2010. So maybe he had that theory, and we're all allowed to change theories. And there's 2010, right? And from there, you had nothing but higher price and lower yield until, of course, things changed and we got inflation 10 years later. But that didn't have to do with that Fed buying spree back then. And maybe it was a buildup. You know, there's real arguments to be made in terms of the buildup over that time, right? Now we have a problem with a generation of houses, right? When nobody's moving houses anymore because their loans are locked in and they don't want to give up that. That was a factor of that entire run up for sure. There's this huge recency bias that we had low rates dramatically for a period of time that I don't think we're going back to, folks. Jump over to the dollar, trading at 97. It saves itself a bit. We're up $1.50. Still a decisive week last week, but you get back all of this week's losses. We take a look at this thing on a monthly. Can't quite get it back. Go a little bit big picture. All right, going to be an interesting week in the markets next week. As I mentioned, Amazon next week. Take a look at the daily. Apple after their numbers. Look at this thing. All right. Oof, look at this. Apple continuing to run. My goodness. Apple had big numbers, folks. $143 billion plus in revenue in 90 days. 90 days. And you got volume. What are we coming into? So weekly. All right. That's some nice strength in Apple for sure. When we talk about AI, the race is on. So, the fourth quarter, you want to buy into ChatGPT, OpenAI? It's on. Look at this. You're going to have SpaceX, OpenAI, Anthropic. They're already holding informal talks with Wall Street. And yeah, what's going to be the number? They call them a $500 billion company here. But they're not going to go IPO at $500 billion, folks. That's not what they're doing. OpenAI is seeking to pull together more than $100 billion in a deal with it valued at $830 billion. And that's pre-IPO. So they're in the throes of a fundraising campaign right now to raise $100 billion at an $830 valuation. SoftBank is discussing investing $30 billion, and Amazon is investing potentially $50 billion. Wow. SpaceX is looking for an IPO, at over $1 trillion. Remarkable. All right, Walmart. Up by 1.25%. Apple's up 1.25%. Look at Walmart, man. Whenever there's fear in the market, Walmart's a great place to hide, folks. Walmart up by 1.7% today. Not the strongest of volume, though. Look at this. All right, folks. S&P's off by 17. We are charging higher into the closing bell here. 69.75. Gold down $478 right now. And yeah, silver sliding $81.90. Silver off $32. One more segment, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 32. NASDAQ 100 off by 1.3%. We just came down and tested the lows there a few minutes ago. Dow off by about 0.4%. The Russell off by 1.5% right now. In the world of OnlyFans. So OnlyFans, folks, they're selling a majority, and they're looking to go public in 2028 is the number. Where is it? So Architect Capital is in exclusive talks to take nearly a 60% stake in the business. They're going to value it at $5.5 billion. Now, the owner, he acquired a majority stake in 2018, Leo Radvinsky, right? The dividends this guy is pushing out. We've read these stories before. He's collected $1 billion, one with a B, billion in dividends just in the last 2 years. The site takes in $1.6 billion in annual net revenue. Now, Maddie, multiply that by 2, it's $3.2 billion, and he takes $1 billion out in dividends alone. Talk about a cash business. And yeah, that's their CEO right here. Amazing. Hey, quite the business. And this one just popping up. Blue Origin, they're halting the flight tours. Yeah, what's going on here? will pause them for no less than 2 years in order to shift resources to accelerating the development of its moonlander and other lunar technologies. They ground the company's reusable New Shepard's rocket, which has launched more than 90 people into the edge of space. He flew on that first one in 2021. 90 people went. No more flights for space travel. It's all business and lunar modules. All right, folks. Thanks so much for tuning in on Quite a Market Day. Hey, there's always another trade. Remember it, folks, no matter where you are in this market, okay? The price of gold, it's $4,800 right now, folks. The price of silver, okay, it's $82. Don't get caught up on where it was 24 hours ago. Make a trading plan and stick to it. Have a great week.